Hey everyone, Kyle. Just wanted to go over a couple of things today, some simple credit repair options for you. These are all things that you can do on your own without having to go through a big credit repair program that can get your credit into better standing. And as you get a better credit rating, you get a better score, you get better rates, you get better offers, and you can get some higher limits. So let's go over some of these options for you. So the first thing I'd like to talk to you about is a secured credit card. Now, if you don't know what that is, you take your own money and you deposit it into account. Say it's $300, and then you use that to borrow off of. You use that as a credit card. You go to the gas station, you go out to a restaurant, you use this credit card, you pay it back. You're paying yourself back. It's your money, but you're also reporting to the credit bureau. So at the end of a year, you get that deposit back and you continue using that credit card. You get your initial deposit that you put in back into your account. However, you have now spent a year building up your credit, which has been positively affecting your credit score. And the banks will give you these cards without needing to have too much of a risk because they're doing so with your own money. So it's a very good way for those of you that can't get a credit card to get into one and start building your credit. And that's by doing the secured credit card option. Now, the next option I wanted to go over is becoming an authorized user. So, do you have somebody that's a friend or family that you know has good standing credit that can be able to add you as an authorized user on their account? If they do that, you'll begin to get their credit history as well, and you'll see a jump in your credit score. This means that it has to be someone that you trust and that trusts you. But if you get added onto their account as an authorized user, you begin to gain their credit history, which will help bring your credit score up. Next option is to pay off your debts and your accounts and collections. So if you have anything that you can start to pay down, anything you chip away at is going to make things better for you. Even if you have to set up a bi-weekly payment instead of a monthly payment, it might be a little bit easier for you to pay, $50 every 2 weeks than have $100 come out at once. Um, Anything that you can do to start getting those balances down is going to help increase your score. The less than 30% rule. So you want to keep less than 30% balance on your cards. You don't want to have 90% utilization on your credit card because that's going to show that you're using almost everything that you have. So the better standing you can be in with your credit card companies, keeping your balance around 30% or lower, that's going to help raise your score as well. To touch upon that 30% rule, something you can do that's simple that will also make that ratio look better is asking to have your credit limit raised. If you raise your limit from $500 to $1,000 and you had $250 on your account, you just went from 50% utilized to 25% utilized, and you didn't have to do anything besides raising your credit limit. And that's also going to show that you've been in good standing with this company because they just raised your limit. They're not going to do that if you are not paying as expected. Minimizing your credit applications. Every store you go into, would you like to save 30%? You can sign up for a credit card now. Sign up for our store card. Get some free gas. Sign up for this. The more of those that you sign up for, the more hits you have on your credit, and the faster your score is going to go down. One of the things that credit companies look at is the amount of applications you've had, the amount of times your credit has been pulled. You want to try and minimize that as much as possible because that's going to very much impact your score to see that you're continuously trying to apply for credit and being denied. So the less that you can do that, the better. Now, yes, you want to pay your bills. You want to get everything down. You want to pay your bills down. You want to get your balances to zero, but do not close those accounts. Something else that's looked at is the longevity of your accounts. The longer you have an account open shows that you're in good standing with the credit company. So you don't want to finish off paying off a credit card and then close your account because that's going to negatively impact your overall average length of credit. You want to have a long standing credit account so that way when creditors are looking at your accounts, they're going to see that you've had this account open for 15 years. The longer it's open, the higher your average is and the better your number looks. The last thing I'm going to go over is credit versus debit. This is something that I have done personally that has helped me a lot, and that's using your credit cards. You have to be diligent, because if you just use your card and you don't follow the second step, you're going to wind up, next thing you know, you go from having $100 on your account to you're at $1,000 on your credit card account. And how do you get that down? The way that you do this and do it right is you go to the gas station, you get gas. It comes to $47. You get in your car, before you even pull away, open up your credit card app and pay $50 on it. You're going to spend this money either way, whether it's on your debit card or your credit card. But now you've done two things. You've paid $3 extra on your account, which might not be a lot, but the more you do this, it's going to slowly bring down your overall balance. And you've also showed revolving credit on your account. You've paid $47 plus $3. You've got $50 that went up, that's coming off of your account, and you only put on $47. So that revolving amount comes off, and slowly but surely it's showing that you're using your account and you're chipping away at that total balance. This is something that I have done for a while now, and it has helped me a lot. It's very much an easy tactic to do, as long as you are diligent with it. Do it places where you're going to remember. Do it at a restaurant. Do it at the grocery store. As long as you can remember that before you leave, you pay that amount, you're going to be in good standing. If you wait until the time that you get home or you go somewhere else, chances are you're probably going to forget. And next thing you know, you just added more debt onto your credit card that you weren't expecting. I'm going to share with you a screenshot of my actual credit history. This is a journey that I've been on, bringing my credit score up. I had some things that put me down pretty low, and I needed to come back out of that hole. I followed these tips that I've talked to you about, mostly the last one, using my credit card, just showing that I'm using it and being diligent. The hard work pays off. Every little small step you take gets you closer to that goal. And I have gotten myself out of a hole not once but twice. The first time I was a lot younger, didn't work out very well. I put myself right back in because I didn't ever build any discipline. Knowing what you need to do and staying disciplined with your credit is going to get you into that higher number, and it's going to get you a lot better offers. I hope this video was informative for you. If there's any other things that you can think of that you've maybe done, or if you have any questions, drop me a comment, shoot me a message, and we can get back to you. Maybe we can do that as our next video, maybe a follow-up to this credit options, or maybe just whatever you might want to see in the next video. Let me know, and we'll do another one soon. Bye.